Welcome to the Startup Funding Espresso. I'm Halti Martin, the host of this show where we talk about raising funding for your startup and the time it takes to have an espresso. I hope you enjoy this episode. Hello, this is Halti Martin with the Startup Funding Espresso, your daily shot of startup funding and investing. After diligence, investors who want to move forward will sign the investment documents. For a convertible note raise, the investor and CEO will sign the note. It's a rolling close, so the funds go into the business the next day. For an equity raise, there are several documents in addition to the term sheet. Some Series A raises can contain up to 9 separate documents, including a subscription agreement, an option pool agreement, investor accreditation status, and more. It's best to have an attorney help with these documents. If the investors requested a minimum amount of funding before closing, then the investor funds will go into an escrow account until the minimum threshold is received. Some companies have the investor sign the documents before due diligence, in which case the funding is contingent on passing that due diligence. This screens out those who just want to see what you have without having to commit any funds. Thank you for joining us for the Startup Funding Espresso, where we help startups and investors connect for funding. Let's go start us something today. Halti Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.